Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 26th of June 2026. The first chart is the US dollar index futures, and they pushed higher again this week. Although it must be said that spread reduced this week over last week's spread, remembering that last week was a shortened trading week. Volume was actually slightly reduced, so the momentum towards the upside just eased a bit this week, and that suggests the market may actually come back and perhaps test this breakout line for strength in response. I've got a wider view this week with this congestion in the background showing you where the next higher potential resistance zone is. Price pushed up to that level earlier in the week or about midweek, and then just eased back a little bit towards the end of the week to close almost at mid-bar for the week. With the reduced spread and volume and the mid-bar close, it does suggest there's a reasonable chance price is going to come back and test this breakout line for strength prior to any attempt to continue higher. It's probably a 50-50 chance at this point, but the trading dynamics do suggest that this push higher may just be running out of a little puff in the near term and may just come back and consolidate, perhaps for a week or so. The next chart is the E-mini S&P. This is S&P 500 index futures, and they did pull back a little this week. Volume increased to the average over the previous week, which was a shortened trading week, where volume was just a little reduced. Prices effectively come back to that bar's low, little overshoot to there, but it's not a really serious pullback at this point in time, and was perhaps reflecting the strength in the US dollar to some degree. The market does appear to be rolling over to some extent at the moment. And that may see price just come back a little further before some buying support, sort of like this bar, emerges. The next logical level below is here, and below that is obviously this line here. So perhaps we'll see the market just come back, test this level for strength, and then show us some form of buying support like this. Very similar to what happened here in the background. This is US Treasury 10-year note futures, and they did show a little bit of strength this week. The market did test for supply below the previous bar's close briefly earlier in the week in here, and then pushed higher to close just slightly above the highs of this little mini range that the market's been trading in for some time. This is not a breakout. It's perhaps the beginning of an attempt to break out, but it's just popped its head up over that level for a bit of a look on increased volume, but still below the average volume, so it's not particularly significant at this point in time, and it may prove to be an attempt to break out at some point. I think the most logical response to that, considering it wasn't really a serious push higher, it was on low volume, would possibly be a little pullback like that earlier in the week, and the market will just wait and see what the US dollar is doing and how the rest of the market's trading. I expect the market really pushed higher this week, mostly on a lack of selling pressure rather than a serious push higher. And what it does on higher volumes will be much more important than what it did this week, floating higher on relatively low volumes. Copper price futures, with the strength in the US dollar putting some pressure on the markets, this market really did pull back earlier, right back below the highs of the range, but it did recover towards the end of the week and pushed back to close right at that important level. And that's the market showing you some strength. Despite the strength in the US dollar, this market did recover strongly enough to close right at the important level on an increase in volume, remembering the previous week was a shortened trading week, and the increase was back to the average. So this was genuine trading. And it is showing you that underlying strength remains in this market despite the headwinds it's faced over the last little bit of time with the strength in the US dollar. I expect this market will probably test for supply in response next week, although if the US dollar does pull back to consolidate, it would allow this market to ease higher again. Gold price futures. Gold price futures pulled back further this week, although the mid-bar close does show you that some buying support has emerged in this market. The market's trading adjacent to this consolidation in the background. In there. That's exactly where the market's trading at the moment. It broke below this attempt to stabilise up here, pulled back with an increased spread, and a mid-bar close show you that some buying support did emerge this week, adjacent to this consolidation in the background. This is where the market found support previously before continuing higher. Volume increased to average over the shortened trading week over the previous week. So that was genuine trading, and the market did find some buying support and closed mid-bar and off the lows for the week. So some modest strength emerged this week in this market. Silver price futures, always a little more volatile than gold price futures. This market did pull back. It effectively broke down below these lows where the market was finding support previously. The next really serious level lower is down here. I don't think the market's going to get down there, especially if some strength was seen in the gold price futures this week. The market may pull back to the highs of that stronger up bar there. That's this volume here. There will be some modest support on top of that bar. It would take a complete break through that level to come back and test this level lower for strength. This bar was effectively a breakout bar above this period of consolidation in here. So there will be some inferred strength on top of that bar and within its range to some degree on the higher volume. And that's where the market's pulled back to this week. And it's closed at that level, showing you that there really is some potential for support at that level. I expect the market will attempt to recover because this week's pullback was actually fairly damaging to some degree. And it may take a week or so just to recover, especially if gold just goes sideways in consolidation mode to reset and recover after the recent weakness. The recovery back above this level will be important at some point. If it's not done immediately, it must take some sideways trading in here prior to an attempt to push up to that level and challenge it again. This becomes a breakdown line in the background now, and they're always a bit more difficult to recover back above. As the resistance increases, the longer the market stays below that level. Like crude price futures, continue to pull back. It does appear the market will come back and test this level for strength. It'll be pulling the market down like a magnet at this point. So you would expect the market will come back and test this level for strength in the near term. Volume increased, but it wasn't back to the average. It increased over the shortened trading week, the previous week, but it remains below the average. So the market's really just coming back under its own weight at the moment, and there's no increased selling pressure really pushing it down. You're getting some modest selling pressure in the market, but demand is what is lacking. There's not enough demand to satisfy the sellers in the market. That's causing price to continue lower at this point. It may be that some demand begins to emerge back at these levels. And you'll get a better chance for the market to consolidate in here. But at this point in time, the market continues to push lower, and I expect this level will be tested for strength next week. Into the currencies now. This is a euro-US dollar currency pair. The market broke down again this week and pulled back to this level, which is the lows of this bar. It did close a little off the lows eventually by week's end, showing you that some modest buying support did emerge as the market was pulling back. And that's reflecting how the US dollar did close off its highs for the week. Volume increased over the shortened trading week and back to average, so that was genuine trading. There was no hidden issues in the market this week. And I expect this market will attempt to consolidate at this level now, especially if the US dollar does pull back to some degree to consolidate itself. This is the British pound currency futures, and they didn't pull back as strongly as the euro. In fact, they attempted to hold on to this level. You can see the market traded either side of the previous close here and recovered to close right at that level, which was a pretty good effort, to be honest. The market's trying to hold on here at this level, where the euro came back to that level below and then closed mid-bar. So there was a modest sign of strength in this market. Volume did increase almost to the average. So it was pretty good trading. And that was a much stronger effort by this market this week. If the US dollar does come back and consolidate in response next week, this market will probably push up to this level. You'll get a bar that pushes up and perhaps closes something like that. Japanese yen currency futures continue to drift lower, showing no great intent. The market continues to show a reluctance to move lower. It really could have stretched lower at this point, but it's just grinding lower without any great intent. Volume did increase, as you would expect, almost up to the average over the previous volume, which was a shortened trading week. This market's not showing any intent. It's not showing any great strength, and I expect it will continue to drift lower pretty aimlessly at this point, at least in the near term. Aussie dollar currency futures, and they pulled back this week under the strength of the US dollar. Didn't actually get to the important level below. That may be a modest sign of strength. That level would have been pulling the market like a magnet down here to test it. And it's just closed slightly off that level at the moment. I expect it'll probably test it next week in here, test it for strength. I do note that volume, while increased over the shortened trading week's volume the previous week, remained well below the average. So the market was pulling back with modest selling pressure or normal day-to-day selling pressure. What was lacking was demand. There was very little demand in the market, and that forced the sellers to push price lower in order to find enough buyers to satisfy those sellers. So that may be a slightly exaggerated bar to some extent due to the fact that the buying pressure just wasn't there to satisfy the sellers. So the response next week will be pretty important now. If the US dollar does come back and consolidate, I expect this market will recover, possibly back to this level again. So we'll watch for that, especially early next week. Bitcoin futures. Bitcoin futures pulled back again this week. This is the bar we're looking at last week. This is the early after hours trade over the weekend. And price did pull back and closed pretty much right in the middle of this little zone. Volume increased over the previous volume, which was affected by a shortened trading week, but it wasn't back to the average. And that suggests that the normal day-to-day selling pressure was overwhelming the buyers in the market. Demand was lacking, and that forced price to pull back in order to find enough buyers to satisfy the sellers. So it was demand that was lacking this week, and that's why price came back with the wider spread that it did. That also suggests that this week's bar may be a little exaggerated over what it may have been if demand was back at its normal levels. And note that the market did close off the lows for the week just slightly, but more importantly, it respected the lows of this down bar and closed pretty much at that level. There's a reasonable chance this market will respond next week and possibly close at the highs of this little trading range that I'm expecting the market to consolidate in. It's only a narrow range, and if the market does break through this level, there's no obvious levels below for quite some way. So I'm expecting the market to make a fairly serious attempt to consolidate and recover through here. There will be resistance, selling pressure emerge if the market attempts to challenge up here, especially if it does so too quickly. So I'm expecting the market will make a fairly good attempt to consolidate in here. And if the US dollar does pull back next week to some modest degree to consolidate, that may take the pressure off this market and just allow it to float higher and perhaps up to the highs of this mini range, either there or in there. Just back to the US dollar index futures quickly. This market did continue higher this week, but the momentum does seem to have eased somewhat. Spread narrowed over the previous bar. The close was almost back to mid-bar, and volume was slightly reduced and well below the average. So the momentum towards the upside may have just eased a little this week, and that may indicate this market will come back and consolidate. It may just come back to that level, like in there, back to here, or it may come back and test this breakout line for strength. But the trading dynamics do suggest this market may come back at least somewhat next week and attempt to consolidate after the strength that it's seen. We've had this push higher in the background, then a period of consolidation, another push higher, a period of consolidation. Now you've had a push higher over 2 weeks. You're probably going to get a period of consolidation in response, sort of in here. And if that happens next week, it'll take the pressure off some of those other markets and allow them to recover in response to the strength that's been seen in the US dollar more recently. Okay, thanks for your time. Back again next week. See ya.